The stock market is going absolutely crazy right now. So I just want to give my personal analysis on where I see things going, how I am playing the markets right now to help you with your investment journey to the best that I possibly can. We'll look at some technical analysis, some different factors, and talk about what's actually happening right now in the markets. But I'll ask, if you do enjoy stocks, you do enjoy stock market investing and all that good stuff, you make sure to subscribe to the channel and you turn on post notifications so you don't miss out on any future videos. But enough of that talk, let's get straight into it. So what we're just looking at is SPY, the S&P 500, and we're actually looking at the 1 month candles. Now, if you don't understand technical analysis, that's okay. This video is not all technical analysis, but make sure to check out the link in the description or the pinned comment. You can go check out my course. It's on sale, and it's got major technical analysis information on there. But enough of that, let's get straight into this. The SPY right now, as you can tell, over the past few months, ever since the COVID drop, has just absolutely gone straight vertical and is not slowing down. However, over the past month, this red candle, then we started the month at 476, and now we're at 441. Okay, but it's literally been all the way down to $420.76. That's a massive drop. The S&P 500 has dropped incredibly large over the past few days and the past few weeks, honestly. So let's go ahead and I want to show you this. It just says, nah, it'll be fine. Look at the technical analysis on this S&P 500 1-year chart. You have Great Depression bottom, World War II bottoms. We haven't gotten close to that. Now, I almost have my own analogy on why things are kind of coming up so much. And I think it's just a mixture of technology and the volume that's been being brought into the market overall. And I say that, and you can just see here, like the 2008 volume was insane compared to like right now. But I think that a lot of this was complete buying pressure. And it wasn't as regulated, or it is as regulated. It's more regulated than it used to be. So people have to be more strict. But it was such a bull market that so many new investors got in, and it was almost like a euphorical high. Like they were just loving it, seeing all these gains. And now that the economy isn't just printing money and companies aren't just like literally making money by talking, it's different. And so you have to really focus on investing in good companies who aren't changing intrinsically and are only affected by extrinsic factors. And let's get into what I mean by that. So here's what I want to just talk about, what's going on in the market. A lot of experts are warning that the S&P 500 could plunge as much as 11% or more if corporate earnings continue to disappoint as the Federal Reserve begins to rise interest rates. So that's pretty important in my personal opinion. The index is down more than 10% over the past few years. If you look on a chart, like I'm just going to go ahead and go into a daily chart in this, and so you can see this. But literally, the S&P 500 is flat for the past 6 months. 6 months ago, today is January 29th. That would mean about September, August, somewhere around here. But just check this out. October, that's the 6 month time period. Sorry, that's not 6 months. This is 6 months. July. Sorry, I just had a complete like brain freeze right there. But you see what I mean? It's been completely flat ever since that time ago. And so that shows, hey, we're at 6 months time. You can definitely buy in right now, and that's what I'm doing. We'll talk about how I'm playing this all out later in the video. But the index is down right now. Morgan Stanley says you need to hunker down for a few more months in this market economy that we're seeing. It says that some sort of catalyst, such as a slowdown in inflation, is going to be necessary, but a lot of Goldman economists don't expect the prices to cool down till the second quarter. So they're saying we still expect inflation to go pretty high, even though the Federal Reserve plans to hike interest rates starting in March to help cool down inflation. That's just it's pretty good because this inflation is gonna slow down and hopefully can get back to its 2% or even lower levels, which is what we really need to see in the economy because it is causing long-term problems. But just looking on some more key points from this, not everyone is a complete bear. A lot of people, right here at UBS Private Wealth Management, they're saying the dip in stock prices this year seems overdone and represents a buying opportunity for long-term investors. And I do agree with that. I do think that a lot of this is almost overdone because new investors aren't experiencing a complete bull run and they aren't buying a random stock, and it's going up just because of the economy. Now all those bad companies, which a lot of people got stuck in on, are not performing well. And I think that just caused a lot of unnecessary falling pressure in the market. And don't get me wrong, I do think we were a little overvalued, and I think we were overvalued in the first place because of how many people were just buying and buying and buying. And though the Fed officials last month said they project only 3 interest rate hikes this year, Goldman Sachs chief economist says Monday that he thinks they'll actually rise interest rates 4 times this year. JP Morgan's CEO said they're going to hike interest rates 6 or 7 times this year. That's his analysis on this, saying even half a dozen or more rate hikes might be a possibility. That's pretty intense stuff, and that's what's going on with the market right now. So how am I playing this? Here's what I'm doing. I am buying into my M1 Finance portfolios on red days. So usually what I'll do is I'll just go to FinViz and I'll see, like, is it a red day? I'll just go look at charts, read some news, and everything like that. But if you want to get access to my M1 Finance portfolios, just leave a comment down below. You can get them for 100% free. They are all completely free. You can just see what I invest in. This is a dividend stock portfolio, mainly about getting dividend income. And then I have an ETF portfolio, which is kind of just, I invest in it, I let it sit there, and I let it ride. The ETF portfolio has been doing really well, but it has kind of fallen down recently just because of the whole economy, different things like that. It's got index growth and value ETFs in there. I do think there's a ton of upside potential. If you use M1 Finance, you can use the link in the description or the pinned comment down below. You sign up, you get a free $50 just by simply depositing $100. How else am I playing this market? I'm focusing more on buying value stocks in companies that have already built their major foundations. What I mean by that is I'm buying companies like Microsoft, Apple, Starbucks, and I'm buying them because they are pretty valuable companies and they're not risky growth stocks. And in higher interest rate like time periods, usually those types of stocks perform far better than your growth stocks. And then I like to hold some cash in my portfolio in order to buy the dips on these red days, buying more of my heavy conviction companies. Now, I mean that by I do only own right now at the current time 3 growth stocks, and every time that I really believe that I should be buying, and the 3 growth stocks I own, everything in the company is still doing good. Their revenues are increasing, their earnings are increasing, the company's just doing incredible things, growing more potential customers, clients, all that different good stuff. But external factors are pushing these companies to the ground, and I think that is the perfect time to buy the dip. And then another thing that I'll just throw in there is I've been buying some more like Ethereum or Ether, Decentral Games, and Sand Token. And I've been buying them, and I do believe in those long term, but I've also been using my ETH to buy NFTs. It's just, I like them, and it's honestly, if you find the right ones, you can make a lot of extra income. That's just my personal opinion. But everybody, that's going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to my channel, turn on post notifications so you don't miss out on any future videos. Thank you for making it to the end of the video. Check out M1 Finance, like I said. Check out my investing course if you want to go learn way more about the stock market and things that you'll never learn from people who really just don't say anything about the types of stuff that I told you in that course. So thank you again, and I will see you at the next video.